Trading was actually difficult until I got to understand some of the things I did that was wrong. Now, one of the things I did was I was actually hunting for the money. Now, if you're a beginner trader and your target is to get to the forex market and make a lot of money, um, I don't think that goal can take you that far before you quit. Now, what I mean is, if your goal is initially you want to get money from the market, first, without getting to know the tool that will help you get that money, you are eventually going to end up losing that money that you invested. Now, why I'm saying so is because Forex is not a get rich quick. No beginner trader start trading and get successful in the space of 1 year. Because why? It will take you time to get to understand what the Forex is all about. Now, in this video, I'm going to be showing you some of the mistakes that I made. That after some years, I was able to figure them out in the market and get to understand what the Forex market was really about. Now, take for an example, you're doing your business. The first thing you want to do is learn a trade or get to know what the business involves before actually going to think of start making profit, because if you don't have an idea of how that business works, you end up losing money in that business. Now, okay, let me give you another example. Take an example, you want to become a doctor. The first thing you want to do is go to school, get the skill, know what being a doctor involves. Trading is not different from every other skill. When you want to become a successful trader and you want to be doing mostly as a full-time trader, what you want to do is get the knowledge that will help you. There's a tool. There are lots of strategies in the market. Now, your ability to find the tool, and second of all, understand how your personality work. Now, what I mean by your personality here is let's say for an example, you want to do a job, you want to paint your house, and you're the kind of person that you know that whenever you want to do something, you want to close out that thing for that whole day. Then you want to consider being a day trader. But if you are a person that you can actually do something for over a week without being disturbed, that means you want to consider being a swing trader. And if you're a person that you know your patient level is actually slow, or you know have a vast range or capacity to hold patience, you want to be a scalper. Some folks prefer scalping because why? They always want to get in and get out. If you're that kind of a person, you want to consider a scalping strategy. So now, three things that you need to become a successfully consistent profitable trader. Now, one of it is the trading strategy. Now, this trading strategy is what will enable you get to know the market. For example, let me show you my strategy in this video. I'm a trend trader and I always follow the rule that say the trend is your friend. Now, if you follow the line I've been drawing here in my trend line in this market, you got to find out that all I'm doing is trend trading strategy. I've actually looked at the big picture of this market and I know that the market is bearish. All that is happening here is just a retracement move. So I also want to benefit from this retracement because I see the market giving me a trend movement. So let me show you what this is. Now, my strategy is simple. Whenever the market comes to an area of value, first of all, I understand the market structure. Now, the structure of this market has changed into a bullish in the 4 hours time. Now, the trend, if I identify these zones here, you get to see with me that the market is actually changing direction. Yeah. Okay. Sorry. Let me see if I can get this out. Okay, like you can see here, the market has actually touched this zone, and repeatedly it has been touching it over and over again. Now, this simply means that the market is actually bullish. So we want to look for opportunities to buy. Now, the area of value I'm talking about, the first thing I did was I understood the market structure has changed into a bullish because why? Trend line has been observed over time. Now, I want to wait for the market to come to an area of value. Now, what's an area of value? There was just one indicator that I use, and that's the trend line, because I got to understand that the market respects the trend line over time. There are folks that use moving average. If it works for you, it's fine. But I always say stick to what works for you. Not because someone else is using the strategy, you want to use it. Like I said earlier in this video, you want to stick to what works for you. Okay, so I always go to the trend line and I move down to the 30 minutes and know what the market is doing. If I see a structure change, that's when I get involved in the chart. So, like I said, one way to get profitability in the market is get a trading strategy. What's the trading strategy? As a beginner trader, I never knew there was something called strategy. I was thinking, it's just something you get in the market, and whenever you see a market move up, a bullish move like this whole move up, you might be thinking that the market wants to go up, so you just get in and start buying. I lost a lot of money because of that little mistake that I was doing, and that happened for over 6 months plus, if not up to a year. Because why? I was after the money. Guys, going after the money is not the first thing. The first thing you should be doing is going after a strategy. Is that strategy that will give you the money that you're looking for. Okay, now the number two thing is get a trading rule. Now, some folks mistake trading rule for trading strategy. Trading rule is different. Now I'll explain it in this video. Now, trading rule actually talks about that thing that guides you in the market. Trading rule is about your discipline. Now let me give you an example. One of my trading rule in this, I wrote it out and I pasted it on my wall though. Now, but I wrote it out because of us in this video. I'm going to showing you what the trading rule is about. Now, one of my trading rule is I'll start doing my analysis from 2. I'm a New York section trader, and I do my analysis from 2. Now, me going to the market to start trading by 10 o'clock in the morning, what Nigeria time, is actually wrong. Because why? I actually set one of my rule to be by 2. So now you see where the problem comes in. Now, if I lose in the market, I'm being affected. Because why? I broke my rule. Okay, now the forest is not a place that determines what happens. The only thing the market has over you is price movement. Get this straight, guys. Let me say it again. The only thing the market has over you is price movement. Every other thing you're the one to dictate. How do I mean? You're in charge of risking the amount of money you want to risk. You're in charge of dictating if you want to get involved in the trade or not. You're in charge of dictating if the setup is yours, if the strategy plays out the way you want for you to get involved. Okay, so everything, you're in charge of it. The market plays the part of the price movement. So another of my trading rule is I will always follow my trading strategy. Now, there are some times that I lose my money in the market and I find out that I didn't follow my strategy. Guess what? That's when my psychology start playing out on me. Like, you lost your money, and oftentimes you find out that you're being affected at the long run. Because why? You are going against your rule. Guys, let me say this again. Your rule is what guides you in that market. Another of my rule says that I'm going to be closing once it's 9 p.m. What? Now, why I'm saying this is because if I don't have a dictate rule, I might end up moving in the cycle of 24 hours. It is very wrong to start trading 24 hours. Because why? You're not in charge of the market, which, like I said, you're not in charge of price movement. So the best thing is to get in and get your profit and get out. Okay, the best thing is to get in, get your profit and get out. You don't want to stay there for long. Like intraday trader, what they might be trading by 2 and they end by 5, or they trade by 2 and end by 4. And day trader, they might be trading by that 2. I'm just giving my strategy as an example, and end by 9. It's cool, whichever one that works for you, whichever one that works for you. So following your rule helps you basically to help guide you in terms of discipline. Because why? If you're not a disciplined trader, you cannot make it in Forex. Take it or leave it. The smart guys, they understand this thing. The big banks, they are the most disciplined kind of personality you can actually think in the financial asset. Why I'm saying so is because these guys, they understand how discipline works. So you cannot come into Forex and think that you want to make money without being disciplined. You will end up losing money. Because why? You're doing it the wrong way. There is no shortcut to becoming a successful trader rather than becoming a disciplined trader over time. Okay, there's no shortcut to getting that success that you want rather than following the due process where you're supposed to get it. If you think I'm wrong, go on Google, check and find out the successful traders, how they were able to do it. They will tell you it all boils down to a strategy that you know, following the strategy to the T. If my strategy is not in place, if I don't understand what the market is doing, okay, now take for example this market that's giving me a head and shoulder. Let me point this out. Okay, this market that's giving me a head and a shoulder. You see, this is the right side of the shoulder, this is the left side of the shoulder, and this is the head. Let me point this out. This is the head. Okay. Don't know why this thing is doing like this. Okay. I'm just leave it like this. This is the head. This is the left side of the shoulder. And this is the head. Now let's go down to the 30 minutes and see what happened actually from this zone. Let's see what happened. Okay. And always take note of time frame alignment, because that's one way to get you involved. But in case you've not watched that video where I talked about time frame alignment, you can actually check the description below. I'm going to be leaving the video link there so you can just gain access to the video. Let's see what happened. Okay, like you can see, this was the big trend line that I drew in the 4 hours, and the market actually came to the trend line. Come on now. See, this is an entry to ride the market to the upside, because why? The trend line has been observed. Let me take this down so that it will be easy for us to see. So this is what we've seen here. So the market is just giving us opportunity to take price to the upside. See, it was the same thing that happened in the 4 hours. Sorry, it was the same thing that happened in the 4 hours. Okay, now that's it for trading rules. The next one is risk management. Yeah, that's the boss. Now why I'm calling it the boss is because, let me say this, it's a secret, but some folks don't really understand it, but I'll explain it to the lowest term to see how I'm able to break it down. Now what I mean by risk management is how long you stay in the market is determined by the level of risk you make. I'll say it again. How long you stay in the market is actually determined by the level of risk you make. If you're risking too high, bet me you're going to be blowing up your account over time, because why? Trading is a game of probability, risk management, and risk to reward. Now, I will explain each of these things into different units. Now, risk management. How are you able to manage the money as your entire capital? How many percent of your entire capital are you risking on the trade? Now, I recommend folks to actually trade risk at 2% of their capital, because why? You end up making out 50 trades for you to blow up your account, and bet me, you're not going to blow up your account in 50 trades. You end up making out some, because why? It's a game of probability. It might play out, it might not. Even the pro traders, they make mistakes. Now I'll explain something. One of my trades, sometime I placed a trade and I was like, whoa, this is supposed to be a buy. And because the market structure is bullish, but I never knew there was a retracement, the market actually went against me. And I was like, what's happening here? It was after I got back to do my analysis, I got to find out that I was actually trading a retracement. What happened? The market seemed like it was going to be moving up. Yeah, every of my strategy has played out fine, but don't forget, you're not in charge of price movement. So what I did was I pulled out of the trade and I looked for another opportunity. Yeah, I was able to recover my loss, because why? I risked low. Now, had it been at risk high, eventually I'll be losing out more money. Take for an example, I'm risking 30% on my account and I blew it. What do you think I'll be risking more? I will not be able to try again, because why? I've risked high already. 2% of your entire capital. And the number two is you want to make sure you're able to tell yourself that, okay, I'll say this. One of my trading rules also, it's if whenever I risk 5% of my entire capital, I've closed for the day. Guys, let me explain this. Take for an example, you're having $100 account in your uh, capital, your trading account, and you're able to risk 5% of that money. You've done for that day. You've closed out. Why are you closing out? Because tomorrow is the day for you to try again. But if you keep trying over time and you blow up to 30%, it will be very hard for you to recover that money tomorrow. Because why? You blew up to 30%. But if you blew up 5%, you can easily correct it the next day and make your trades come back into place. Trading is a game of probability, risk management, and risk to reward. Now, I see some folks risking 10 pips to get 2 pips, 10 pips to get 5 pips. Some even risk 50 pips to get 40 pips. That's wrong. That's not a risk to reward. Risk to reward in this place talks about your risk being low. 1 to 3 is cool. 1 to 2 is fine. You hardly see 1 to 5 in the market, but I'll bet you always see 1 to 3, 1 to 2. It is always cool to risk 1%, or 10 pips to get 20 pips, 10 pips to get 30 pips, 10 pips to get 50 pips is cool. But going for 50 pips to get 40 pips or 50 pips to get 30 pips, that's not a trade. That's not a trade.